Really good, not to be missed. Cool. Nice one. So that's it. We've done it. Going to just check in with the chat. Rook Trade says, what is SAR? Well, it's support and stop and reversal. Parabolic SAR, stop and reversal. Where it comes from is a guy called J. Welles Wilder. Jur. That's how I say his name, just for a laugh. J. Wells Wilder Jr. So anyway, J. Wells Wilder Jr. was a guy that invented this concept in 1977 in a book called New Concepts in Technical Analysis. Look at this. Just the first link on Google. I don't know. Is this breaking copyright or whatever? I don't know. I don't know. Just there you go. And in this book that's loading up right now, seemingly, I totally didn't expect this to be happening, but here we have it. He actually introduced a new concept in technical analysis. Way there it is. That's the very book. It's the very book called the Parabolic SAR. So let me just scroll on down here and show you all about this, buddy. So anyway, great book. Recommended reading? Absolutely, 100%. Now I understand that not everybody wants to read a book by a mathematician. Okay, I get it. Okay, I get it. Right? It's a book written by a mathematician. I love this guy. He's great. Okay, he's the guy that invented the RSI and the DMI. I think he's good. I think he's one of the people. If I had to draw up a list of the 10 people who've contributed the most influential things to technical analysis, he'd be in there, right? Add that link in the Discord educational tab. Okay, cool, good one. So for anybody watching along, this is the Discord, and the Discord, of course, is paid. If you're not a member of this, it's a paid group for people from the end of this month. Now, this is a process which is happening bit by bit, and I'm withdrawing chunks from it. But currently it's public, and you can get in there for free. People aren't necessarily going to be grandfathered over though. Okay, but anyway, we've got a paid group here, essentially, right? That's what it is now. And for the education section, absolutely, you're not. When this thing goes paid, completely, only the general bits won't be paid. These things like education, etc., will be paid. And there we go. As you can see, we're obviously just kind of starting things off. Hey, I just made it to level 2. Nice. Right, so obviously we're just starting things off there. So anyway, right, yeah, wait, that's the wrong tab. This one. So where is it? Let me just see if there's any gems in here. The missing part of most technical trading plans. Most technical trading plans have two parts: a technical trading system, a capital management technique. Most technical trading systems are trend following systems. I believe a trend following method is the most profitable method to use in trading and trending markets. However, a trend following method invariably gives back a good part of its profit when the market changes to non-directional sideways movement. That's something that we all know about, right? So one of the things that he came up with to address this issue is this first chunk here, the parabolic time price system, right? Okay, we just call it the parabolic SAR now. And why is that? It's because we look for this stop and reverse. Okay, it's a stop and reverse point. And where the stop and reverse point is going to be is worked out by this mathematical formula over here, which is handy for us that we don't actually have to do the maths now. My God, by the way, honestly, I hate maths. I really hate mathematics. I hate math. I hate maths, plural, singular, or indeed fancy pants, full word. But there you have it. And anyway, he did it back in the day for us. Thanks, mathematician guy. And what the general principle is in addressing that first paragraph there. Okay, so what you have is a position, and as each day goes by, you can see here that initially these dots represent your stop. By the way, I wasn't necessarily very clear about that. I'll just hide this here. These white dots on the parabolic SAR would represent where you would stop out of your trade and perhaps reverse the direction that you're going in. Now, you wouldn't necessarily do that immediately. Don't take my word for it. don't take my word for it. Take his word for it. It's in the book somewhere. I'm not going to find it right now. It'd take too long. You wouldn't necessarily do it. You'd have to, on the one hand, be slightly discretionary about it, but also, you're looking for more than just simply that. However, time goes by, now people kind of say, oh yeah, stop and reversal, so you would just immediately change your position. No, what are you talking about? But you could manage it like that. Instead, what it is about securing the profits that you've got. It isn't necessarily about predicting the way the market goes. That's not what it's about. It's not what it's for. So what it is for is for trying to establish the best area over a long period of time, like a mathematician loves to do, by taking a way of working and applying it back in the past at various different things to figure out where would be the best area for you to actually stop out of any trade and take profit on it. And as you can see, so all these points here would be stop points for you in your trade. So over here on the charts, at this point on the 3-day time frame, you would stop out of your trade if you were shorting it, because of the way that the maths that make this formula work. The implication is that you'd be shorting this on a bigger term time frame at this point. There'll be various reasons for that. A quick identification of some of those reasons comes in here when you look at how the prices are below the 236 Fibonacci retracement, for example. Now that's not what he uses, but for example, there's numerous different ways of coming to that conclusion. But your stop point would be here at $5.40. Oh my God, what did we say earlier on the show? Anybody? $5.40 perhaps? Yeah, okay. So, you can see that the maths behind this are obviously fairly robust. I'm on the 3-day time frame. This changes. That's almost coincidental to an extent, but it's lovely, right? So I'm going to take that. I'm not going to blow it up so much to say this is perfect, because it isn't. But as you can see here in the 24-hour time frame, this is actually just flipped positive, and of course your stop and reversal points down there at the 290s. Fair enough. I can't argue with that. If the prices go below 290, I'll be thinking of a short. If the prices went below 290, would I be thinking of a short? Yeah, but I wouldn't necessarily enter it there. You see, that's the thing. It's not. I wouldn't necessarily enter it there, because I'd maybe be looking at this and saying, well, is this representing a really slanted head and shoulders? Is there a neckline? Will we get a retest? Maybe I would. I don't know. I digress far too much. This is the Parabolic SAR. It shows you where you can manage your trades. It's kind of like how I explained. You wouldn't necessarily flip direction just as soon as it hit. It's got a mathematical formula behind it. It was invented in 1977 by a guy called J. Wells Weller Jr. It's a good book for reading, very educational, and you can see that it's been, is that you can work it out, okay, using maths and stuff, right? Great, groovy, nice one. Now, as well, you'll see me reading this book and using it to help explain the DMI indicator in my DMI educational video, the very best video explaining the DMI indicator on YouTube, right? There only are 2 people on YouTube who understand the DMI indicator. That's me, myself, and Eric Crown. That's 3 people. Me, myself, and Eric Crown. No, 2 people. Myself and Eric Crown. And TradeSpawn understands it. I mean, there's other people out there, but in terms of the ones that you're likely to have come across outside of this community, is kind of what I was meaning, is me and Eric Crown. We're the only ones who understand the DMI. Pretty confident when I say that. I'm not 100% sure. Might be wrong. But most people don't get it. It's one of the most complicated indicators in the world. I made an hour-long video explaining it one time, and I used that book to do it. It's well worth a watch, that video. I will be removing that video before the end of the month from YouTube. It'll be on Patreon thereafter. I might edit it a wee bit, or maybe even remake it, but I'm going to remove my educational content from Patreon, from YouTube. Okay, it doesn't draw any attention to the channel, and it undermines the value of my the actual price tag sort of value of my education, and it's not worth it. But if you want to catch that video now, well, you still can without having to go and join the Patreon, well then you can, but you'd have to be quick. And it's an hour-long video. So who's got time for that, right? Anyway, there we go. Rook trade. Does it matter on which time frame to find this pattern reversal? I think I talked about that. Did I talk about that during this? I think I did. Yes, the SAR. For example, if you see a reversal on the 15-minute chart, but the 4-hour is still bullish, exactly. Yeah, you're gonna have stuff. Oh, combine it with Williams fractals. By the way, Williams fractals, really good way of putting something on your chart to confuse people, but not confuse people, but to be another phony thing, right? But let me just show you the Williams fractals. They're saying is that there's educational material here, and it's all really good to no. This is not snappy enough. Let me do that again. None of that was financial advice, by the way, people. I'm not a financial advisor. Always do your own research. None of that was tax, insurance, trading, money, financial. None of it. No advice. Not advice. There is educational content here, okay? And I really try to help you. I empower you, the individual. Now, I will not show you my trades because I think it's unethical. Also, I think it probably breaks several rules on the old YouTube and American law as well, probably. As well, moreover, I don't think that sort of thing is useful. Instead, what I try to do is really help you make your own mind up about things, and to help you do that research, and to help you do that, to be your own financial advisor. I'm just a spirit guide, and I really thank you for tuning in for that episode.